Good day, traders, and welcome back to another weekly dose of market insights with me, Zain, Vawda, your analyst here at OPT. Another fruitful week ahead of us after what was another busy week. Obviously, still a lot of focus on the so-called Trump trade, US election, and what that might mean for markets moving forward. And it seems markets are themselves still deciding what is going to happen or what might happen moving forward into 2025. Of course, we still do have about 6 weeks left of 2024. Quite a bit to get through today, guys. Like I said, let's take a look quickly. Obviously, if we're looking at the agenda for the day, we will be looking back at last week. Obviously, the reaction to that clean sweep for US President Donald Trump and what that meant for markets. And then obviously we will look at some of the US data that was out last week and how that shaped markets. And then we look ahead towards this week. What key data events we have this week, quite a bit on the calendar. And then obviously we will look at some chart work and some technical. If we may, guys, if I may quickly just look back obviously at last week before we get into the data for the week ahead. Looking at last week's development, guys, obviously the Trump trade and, the US dollar is still quite strong. A lot of, what we are seeing in markets is to do with a return of Donald Trump to the White House and what that might mean for global markets. Obviously, concerns around trade wars with China. We've also heard comments by incoming President Trump around potential, debates and potential trade war with the European Union as well. That seems to be another sticking point. And we did hear over the weekend as well, an economic advisor to President Trump actually mentioning that as well, that, if the EU doesn't buy as much US exported goods, then obviously they might not get as favorable terms as probably other countries. The same for the UK as well. So there is this concern around what's going to happen in 2025 when President Trump does assume office. And then obviously last week, guys, we did have, strong US data once more. Just adding to the idea that the Fed might not cut rates as much as had previously been expected. As things stand at the moment, guys, markets are only pricing in around 72 basis points of rate cuts from the Federal Reserve through to the end of December 2025, meaning markets are only seeing another 3 more 25 basis point cuts between now and the December meeting next year. So this is quite a change, obviously, from what we had been expecting earlier in the year and what we had been expecting just before the US election as well. So that obviously, with that, rate cut situation around the Fed there further, complicating matters for market participants, obviously what to look at, what not to look at, and the effect that, less rate cuts might have on the global economy. We are already seeing some of that effect, obviously, with the stronger US dollar, the dollar now trading at multi-month highs. So, we have seen quite a bit of a change with that. Obviously, commodity prices have suffered quite a bit, obviously expecting that higher interest rates from the US. Gold, experiencing one of its worst weeks in quite some time. I think it was, yes, gold, biggest weekly slide since 2021, if I'm not mistaken. So, we have seen quite a bit of a market shift. Obviously, gold, was being punted as potential for $3,000 and the beginning, or not the beginning, but, in the middle of the commodity bull complex, that we could have seen further highs on commodity prices. And that obviously such a move is not out of the question as of now. But for now, though, there is obviously the sharp pullback in gold prices and so on. So a lot to consider there moving forward. However, it is important to note, obviously, we have said this before, that President Trump will only assume office on the 20th of January, 2025. So there's still some time for that to happen and what might happen in between now and then. And obviously, with that in mind, guys, looking at what we've seen so far today with markets opening here, start of the new week, we have heard over the weekend that the United States would possibly allow Ukraine to finally use some long-range missiles to strike deep within Russian territory. And that obviously has seen a bit of an uptick in, risk sentiment this morning. We have seen a little bit of a safe haven buying, if you will, this morning with gold prices rising slightly. So that obviously now is, a renewed focus for the week ahead. And, I think it's timely. We had been, debating this effects of the incoming election, following the election, the potential presidency of Donald Trump next year and what that might mean for markets. But now, obviously, with this Ukraine situation coming back to the fore and obviously data back to the fore, one would hope that this week markets might be a little bit more focused on that. However, there is obviously still President Trump is still, making cabinet appointments and that for when he takes office on the 20th of January. And with that, there is still some, there is likely to be some volatility from that as President Trump announces more members of his cabinet for next year. So just with that in mind, guys, we can keep an eye on that for the week ahead. And obviously, what happens in Ukraine could obviously lead to further safe haven flows in the week ahead. So pay attention to those two things as well. But besides that, obviously, we could shift and look at, apologies, guys. If we may, we can take a look and shift to see what is actually on the economic calendar for the week ahead. If I can pull this economic calendar up here, guys, we're looking at a trading view calendar. Yes, trading view calendar is pulled up, guys. And as you can see today, not much so far in terms of high impact data. Actually, nothing on the docket. Tomorrow, obviously, things do start to pick up. We do have that RBA minutes tomorrow, preliminary building permits from the United States as well, and then Canadian inflation rate, which should be pretty interesting. Canada has been struggling quite a bit. The previous print there coming in at 1.6% there on the inflation, headline inflation number. Further declines there obviously might prompt further rate cuts for Canada. And obviously, given how this, like we mentioned, this rate differentials between countries are currently becoming a really big deal now with President Trump coming in. The Canadian dollar could lose further ground against the greenback and some other major pairs as well. Just speaking about that, USD CAD obviously finally breaking above the 140 level last week. So with this inflation number here as well, if it does come in below expectations, then obviously we could see further weakness in the CAD as well. So maybe pay attention on that front as well. The UK, obviously, inflation rate is going to be key once more. We are seeing some real progress for the UK. We have been saying this for a while. However, services inflation, guys, remains the serious concern. So keep an eye on services inflation. If that number comes in below, expectations, then we could obviously, expect, more rate cuts from the United Kingdom, from England. And I'm guessing that would be priced into markets, and that obviously could lead to a little bit of a weaker Great British pound. However, if that services inflation number does come in higher than expectations or does edge higher again, then obviously that could be that the Bank of England isn't able to cut rates as much as they would like, and with that, obviously, we could get a slightly stronger pound. So pay attention to that as well, guys, when it comes to UK data. On the inflation rate from the yen side, guys, not much coming out there. We obviously did hear some comments this morning from Bank of Japan Governor Vawda, where he spoke about, the risk of keeping interest rates too low could be that inflation starts to tick higher. So this is something now, it's kind of a very difficult balancing act for the governor there at the BOJ, obviously with an incoming prime minister there as well. Quite a lot there that's going on at the moment in Japan. Not a very stable situation, if you will, right at this minute. So quite a bit there, obviously, to keep an eye on. United Kingdom on Friday, we have retail sales again, guys. Give us further insights into the UK economy, which has, as I said, or as I'm sure most of you know, has exceeded expectations so far this year. So it'll be interesting to see if that momentum is maintained, at the moment. So as we're heading into those winter months and obviously the festive season upon us. Germany manufacturing and PMI data, which will be out this week, guys. PMI data, particularly from the Euro area, is said to be really important. The Euro area is struggling tremendously in terms of growth at the moment, and Germany obviously being one of their major concerns. Germany, obviously, the most industrialized economy in the Euro area, but really has been struggling this year. Some of its biggest car manufacturers as well under pressure. So a lot there, to pay attention to, especially if that manufacturing number comes in lower than forecast. That could really weigh on the euro moving forward. So keep that in mind as well. But yeah, that's all from the calendar, guys. I think there is obviously some more earnings still coming out this week. However, I think the biggest earnings released this week, guy, would definitely be NVIDIA, especially given the drop-off we've seen in US stocks. And the major concern, I think, heading into this earnings season and at the moment for markets is whether, AI-linked stocks in particular are able to maintain their growth and their earnings forecasts moving forward. A lot of people thinking that, we might have seen these companies like NVIDIA might not be able to maintain the momentum moving forward. And obviously with that in mind, there is concerns that obviously the earnings and the company's performance is not exactly linked to the share price, which wouldn't be a surprise. This is something that we see quite often. I think on this case here, particularly given the whole industry around AI and how that is shaping up with valuations skyrocketing, a significant miss for NVIDIA to the downside could be detrimental to US stocks, whereas a significant beat by NVIDIA and more optimism looking forward would definitely give the US indexes or the Wall Street indexes the shot in the arm that they need to continue their rally to the upside. So keep an eye on that as well. But yeah, guys, like I say, while we're all here to look at the charts and see what the technicals tell us, just looking at things, guys, I think starting off with the dollar index, as I mentioned, everything's been dollar-based since that US election. And as you guys can see here, guys, we have run into this key multi-month resistance. Now, this resistance level, guys, held and was a key resistance level back in November 2023. So obviously we're trading now at 11, nearly 12-month highs, you could say, basically. So at this 107 level, we are seeing a bit of a push away from here today. However, my concern this morning was slightly around whether the safe haven appeal of gold down to the Russia-Ukraine situation might actually spill over back to the US dollar, something which has been happening quite a lot this year. Obviously, the dollar does seem to have that safe haven appeal as well. But so far, guys, we are seeing this push down lower here from the dollar index, and that obviously a positive, meaning that we could be in for a bit of a deeper retracement from the USD here this week, which could obviously help the majority of its G7 peers, as well as a recovery potentially for gold as well. Quickly looking at pound USD, guys, and this one here, pound continues to struggle down here at the lows, guys. We have obviously run into a key area of support around the 12600 handle. And, obviously quite a big sell-off, guys, over the last 2 weeks. So I wouldn't be surprised if we do get a bit of a pullback at the moment, especially if that dollar index continues to push lower. Maybe 127.50 might be a good area to keep an eye on for potential bearish continuation, or then we could focus at this 200-day MA towards, and potentially these previous lows around here at 128.50. So maybe that 128.200 to 128.50 zone, guys, keep an eye there for some price action. That might be a possible continuation or bearish continuation for Great British Pound USD. Now, the Euro USD, guys, similar to Pound USD, also hovering quite near a key area of support. Now, I actually wrote an article about this today, guys. I think my biggest concern with the euro and the pound against the greenback in particular largely stems from this growing divide in rate differentials between the two countries. Now, as I mentioned earlier, the euro pricing in around 140 basis points of cuts, and the US Federal Reserve pricing in around 70, which means that's half the amount of the ECB. And that is partly the reason why we've seen the significant sell-off in euro US dollar. Now, obviously, looking at it here, we did have that inverted hammer candlestick close on Friday, hinting at a bullish upside today or bullish continuation. We are pushing up at the moment after, trading sideways since just before the lunch hour in the European session. And in the last hour or two, we do seem to be pushing on finally. We did obviously make highs of around 105.700 in the European session, but after that, we came all the way back down to 105.30, now back at that 105.73. So if we can push on, guys, we do have this resistance block here around 10600. Above that, we do have a 106.98 or 10700 to round off, and then obviously descending trend line and another key area of resistance around 107.50. So quite a bit to watch there, guys. A break below, obviously, the 10500 handle, guys, I do have an area of support marked off around 104.50, and then below that, obviously, 103.66 to the downside. So that would be what I would be paying attention to on the downside moving forward. Pound Japanese yen, guys, I really thought this was an interesting one following that massive, bullish breakout of the trend line and push higher to within whiskers of that 200 psychological level. However, since then, we have printed lower highs and lower lows, and that has brought us to a retest of the 100 and 200-day moving averages. Now, this is where it gets a bit interesting, guys, because the 100 and 200-day moving averages are about to cross over in what would be a golden cross pattern, or actually not so much, mistaken, apologies, guys, a death cross pattern here, with the 100-day moving average crossing below the 200-day moving average, which is usually a sign of bearish momentum. However, just looking at the charts, guys, and as you can see, we were in a significant bullish uptrend. We are now making lower highs and lower lows. So I suppose a death cross is not completely out of the blue. However, just based on the support that we do have here, which is quite a bit, this entire range here, probably between 193.80 and this 195 handle, basically, is quite a significant area here. And if this area does hold, guys, I could see a push on back towards 200. Now, a lot of this will obviously depend on the fundamental narratives on the pound and the Japanese yen. But just looking at the technicals here, I do favor further upside on this, particularly if we don't see any changes from the BOJ in the short term. So keep an eye on that, guys. A break of 200 still a possibility for pound Japanese yen. Brent crude oil bouncing nicely, guys, at the start of this week after last week's losses. Brent crude already up 2.64% on the day. And this also partly to do with that, escalating tensions, Russia, Ukraine, the Middle East continuing to experience its fair share of struggles and, in reaching a peace deal there. Nothing seems close on that end as well. So the potential here for higher oil prices does remain. However, like we said, there is significant headwinds when it comes to oil. So just bear that in mind, guys, when looking for long positions. Gold, like we mentioned, guys, the biggest weekly loss since 2021 last week, with gold prices dropping around 5%. Like you can see here, guys, I have drawn in these two trend lines here. We have an inner trend line and an outer trend line. And as you can see, we've basically broken below both. However, the outer trend line, at least, it seems that that could have been a false breakout. As things stand, we have broken back above that level. And quite a significant bullish engulfing candle today, pushing gold up to trade at around 26.12 now at the time of writing. I would keep an eye on 26.24 as a potential area of interest, 26.39, and then obviously 26.50. So yeah, like I mentioned, guys, quite a bit to unpack here on gold. I think that 26.39, 26.40, 42, around that zone could be a really important one. Obviously, that was the previous swing low that we had here on November 7th, which is why I'm a firm believer that that area could prove to be a significant test there. So let us see how that plays out in the days ahead. US indices, guys, obviously we mentioned that sell-off last week, as you guys can see, brought us all the way back down. This has almost wiped out the majority of the election gains, guys. Obviously, Tuesday the 5th was election day. However, the big move came on Wednesday. And as you can see here, by Friday, we had almost wiped out 3/4 of that Wednesday candle. So yeah, not a lot there. Having wiped out all those gains, markets do still expect, the US stocks to go higher, especially with Donald Trump coming in as president. There is also something else to consider, guys, as we head in towards December. This could just be the pullback ahead of the much lauded and much talked about center rally, which happens usually every year around the December month. So could this obviously be a potential pullback ahead of that center rally? I'm guessing time will tell. But for now, just bear that in mind, guys, in case you are looking for shorts downside 20,000. And obviously, we have this ascending trend line and the 100-day MA, which currently rests at 19,777. Apologies for that again, guys. So lastly, guys, I thought we could look at the S&P as well. And as you can see here, having broken the triangle pattern, as I mentioned, 59.10 was my first target. That has been hit. Now, as things stand, guys, we are looking for potential continuation towards 61.70. That would obviously complete this triangle pattern breakout, which we had here. Now, we are in an area of somewhat support here at the moment. We are being supported as well by the 20-day moving average. So, there is a possibility that we do push on here. Obviously, later in the week, guys, just to wrap things up there, since we are with the S&P 500 and the NASDAQ, looking at US stocks and Wall Street, like I mentioned, NVIDIA going to be really key this week and could turn out to be a key driver for both the NASDAQ and the S&P 500 for the week ahead. But yeah, I think that's a wrap, guys. Like I say, we've covered quite a bit today. Please trade safe for the week ahead. I expect that we will see some volatility later in the week, but I do also think that there will be some exciting opportunities. Bear in mind what's happening with the geopolitical situations globally. And, in case you see any sudden moves that data can't explain, then obviously take a look if there's been any developments on the geopolitical front. But for now, trade safe, and I will catch you guys soon for another weekly dose of market insights. Have a good one. Bye.